In this class, we keep on our discussion on different financial systems, including purchasing system, sales system, and payroll system. So let's start to discuss about the purchasing system. Purchasing is one of the key cycles within an organization, especially for those for production or manufacturing industries, as well as the trading companies. And the main stages in the purchasing cycle includes: first, requisition. The purchasing department is the standalone department, and different departments, say sales department, HR department, or any other departments or production department, they need the materials for their operations. For example, the production departments. So production department in this case is the requesting department. They raise the requisition. So staff decide what goods or services they wish to purchase and produce. A purchase requisition. For example, a production department need the raw materials for their production. So here, production departments, they wish to purchase the raw materials to produce goods. So they need to prepare the purchase requisition or the purchase requisition form. And the purchase requisition form is then authorized by the department supervisor and passed to purchasing department for further processing. So here, the first step in the purchasing cycle is not initiated by the purchasing department. It should be done by the requesting department. In this case, it's the production department. Once the purchase requisition is approved by the respective department's heads or supervisor, it passed to the purchasing department for ordering. And the purchasing department places orders with suppliers. In general, it needs to obtain several quotations to get the most competitive price, especially when it is a large amount. For example, if 100,000 is the threshold for the company to get 3 quotations, then it needs the purchasing department will do it. Maybe in another case, there's only $50,000 for the purchase. It only requires probably is 2 quotations is enough. Then the purchasing department will follow these guidelines or policy to produce the quotation, to produce the order, the purchase orders with the suppliers. If it is a large amount, the orders may be authorized by the purchasing department because it's, the requisition department just approved by the supervisor. But the purchasing department need to verify all the details, maybe asking questions to ask whether it is required, or why, the reason behind why do we need such a huge amount of purchase. And the purchasing department head needs to authorize if it is much more than the usual amount of order. So after placing the orders, the supplier will prepare the goods and then send the goods to the factory or to the requesting department. The goods should be received by the requesting department. It's not the case for the goods to be sent to the purchasing department, because for purchasing department, it is the administrative department. So for example, like the raw materials for production, the user, in this case is the production department, will inspect the goods quality to ensure that they are in good condition and the quality is correct. So it's generally the requesting department to do the verification in an inspection. And the requesting department will fill the form, say the good received notes, as a record and kept all the goods received. The records should pass to respective departments, say the purchasing department, for filing for completion of the purchase, as well as the goods received notes should pass to the accounting department for their records, because the invoice will be received. Accounting department receive the invoice by the supplier. for the goods and services delivered. And before recording in the accounts, the accounting department needs to check or needs to ensure the goods are received or well received and that the price is correct. So the accounting departments need to verify with the good received note passed by the production department in this case, as well as the amount or the price per unit is correct. In general, the price can be found in the purchasing department in this case. Production department, sometimes they don't know how much of the unit price that they ordered for, say, the raw materials. For purchasing department, they know the quantity as well as the price for each item. So for accounting department, they need to verify the details with all inputs generated in the production department or the requesting department and the purchasing department. And once confirmed the details, accounting department should record in company's accounting systems based on the invoice information and prepare for the payments to be made. Payments can be made through online or can be through the offline, like to send a check to the supplier. And the payment should be approved by a senior manager who will first check that the details on the payment agree with the invoice. In other words, first of all, when the invoice recorded in the system, and if it is a credit purchase, it means that the payment should be made 30 days, for example, 30 days after the goods delivered into our warehouse for the production. And the accounting department will arrange for the payment before the payment due date. So in the payment due date, the bank will process the transactions, but before that, the senior manager, for example, the finance directors, need to approve the payment within his or her authority for these purchase items. And the finance directors, he or she need to check all the details for the payments which should be aligned, or the information details should be agreed with the invoices. So here is the purchasing systems. There are different elements or inputs in the system. First you have the requesting department, and also you have the purchasing departments to process your purchase order. The requesting department will receive the goods or services, and for accounting departments then get the invoice or invoices and prepare for the payment as well. So you can see there's different elements in the systems and they are interlinked with each other. And the second cycle that I would like to share with you is sales system. The main stages in the sales cycle is listed as follows. First, order received. It generated from the sales department, and it depends on the business. Some sales orders may be received by post, by phone call, or in person, or through email, say electronic way. A record should be made of incoming orders so that a check can be made that they have all been processed. What does it mean? Once you got your sales call or sales orders by the customer, if say it's by phone call, you need to drop it down the details and pass through to the respective department to deliver the goods. So here for the sales department, they need to have a good records by tracking all incoming orders. If there are many ways to receive the orders, say by post, by telephone, or even in person or electronic way, then the system to capture all incoming orders should handle or should be able to handle all types of incoming orders. And then order processed. Before sending the goods, department need to check whether the order should be processed. Say a check should be made to ensure that the customer has a valid credit account or has already paid in cash. It depends on the credit terms that we grant to the customer. If say it is COD, what does COD mean? It is cash on delivery. So if it is the payment terms is cash on delivery, in other words, that our logistic team deliver the goods to our customer, and when they deliver the goods, put the goods in front of the door, they need to get the cash back from the customer. So here is the cash on delivery. But if it is not the case, then it means we grant the credit terms to the customer, say 30 days. So the customer can pay to us 1 month later, and we need to check whether the customer is able to do it. There's a credit check. And also we need to check for the goods, because once we accept this sales order, next is we have to ensure we can deliver the goods to the customer, provided that we have the goods in our inventory. If not, then we need to consider whether we need to process this sales order, because we cannot commit to our customer that our goods can be delivered to them. And third is an order confirmation to be sent, saying that when the customer passed the credit check, so we can grant the credit to them. And next, we have the goods in our warehouse, so we need to send an order confirmation to our customer to say, hey, I'm fine, I accept your orders. So and state the dates for delivery. Then the customer can prepare the payment to us. So after the orders received and processed, next step is goods dispatched. The goods are sent to the customer once all the credit control check is done, as well as we have the goods. And a document called a goods dispatch note is produced, which will be signed by customer, confirming that the goods were received in a good condition. So what does that mean? So when we deliver the goods to our customer, at the same time we need to ask our customer to sign on a document called goods dispatch note. Once the customer signs on the goods dispatch note, it means that the customer is happy about our goods delivered to him or her, and it's not just about the good, it's about whether the products delivered to him is in good condition, whether it's fine. If he signed for it, that means okay, he accepted, and our responsibility or our obligation is discharged, because we commit to send the goods to our customer, and we have already done it. Then customer has to confirm with it. So after the goods are dispatched or delivered, the sales department can send the invoice to a customer. An invoice is to send to the customer and details the amount charged for the goods. So once the sales department prepare the invoice should be passed to accounting department for coding. That means the invoice should be coded and authorized by the respective people or person in the accounting department. So the invoice will be recorded in the accounts as well. And the invoice will be sent to the customer and waiting for the payment. And payment will be received by the accounting department. And the customer paid to the account department, and the control should be in place to ensure that the staff are not in a position to misappropriate the payment. And the credit controller contacts those customers who are late in paying. That means if we grant the credit terms to the customer is 30 days, then we should get the money back from the customer in 1 month. But if it's not, then we need our accounting department. There's a person called credit controller will investigate and contact the customers for payment as soon as possible. As said, there's a credit controller. So for the sales system, we need to ensure what will go wrong. In this case, what will go wrong? The customer, they don't pay to us on time. So before processing sales orders, credit check is a must. if the term of sales is not cash in advance or cash on delivery. And it is important that a company only sells goods to those who are able and willing to pay for them. So in other words, the credit controller is responsible, or he or she is to ensure the customer can pay to us or are able to pay to us. And for some businesses, such as fast food outlet, customers pay in cash or by credit card, so the company is assured of payment. But for most businesses, companies buy and sell on credit, meaning that they pay for goods purchased and receive payments themselves for sales sometime after the goods and services are delivered. It's quite popular to see the credit sales here, because the credit sales for production company, say for trading company, and it's quite often to see on those, say, business to business model. But for business to consumer, that is the retailing industry, no matter it's supermarkets, fast food shop, the customers are mainly paid by cash or credit card. So under the business to consumer business model, the payment is quite unsure. So it's seldom found any credit risk on those industries. And it is important that a company only gives a credit account after careful consideration of the likelihood of receiving payment. So in many business to business arrangements, or the sales between business and business, the credit account or credit control department is one important department in order to look at whether the customer are able and willing to pay. In some cases, the credit controller need to investigate the customers or the new customer for its the annual reports. If possible, if it is a listed company, then it needs to fund through the annual reports, do the credit check and credit research through some credit intelligence agency. So based on all information obtained in the market or obtained through different ways, the credit controller need to advise whether the customer is acceptable, and whether acceptable for credit terms and payment after the goods are delivered. So here is one of the key control points for what will go wrong in this case for the sales system. So here, as mentioned, the credit controller will ask companies who wish to obtain credit to complete an application form, and sometimes to give a reference from a bank and an existing supplier. So it's a reference check. And credit controller then sets a credit limit, which will normally be quite low initially. So here is the detailed execution when a company is granted by a supplier credit terms or credit limit, say 30 days payments, but the credit limits may be only $10,000 only. Say, for example, it can be extended to say $100,000 or even $1 million for the credit limit, but it depends whether the relationship between the supplier and the customer, as well as the credit history. And the credit controller also monitors which companies are late in paying and chases late payers where necessary. If customers pay late, for example, its payment record will be marked, hey, this company paid late for how many times, say for first time or second time, or say already 10 times. Then the credit controller can advise the sales department whether we can still accept the sales order for this particular company because the payment history is so bad. So now let's move on to discuss the payroll system, which is the final topic in this class. The payroll system, as said, for any organization, they have the staff. So payroll system is one of the most important systems within an organization. And here are the main stages in the payroll system. First, pay rates obtained. including fixed data and proper authorization needed for pay raise changes. So what does it mean? First of all, we need to understand that in some companies, they would like to pay the staff per hour, but in some staff, they are paid per month. So in the system, this pay raise should be obtained with appropriate authorization. So whether the staff are paid out on an hourly basis or paid on a monthly basis, it should be approved by respective supervisor and in HR department as well, in the human resources department as well. And they should be in a system which is a computerized system. If any pay rates are changed, say for example salary increment or the number of hours, the hourly rate changed, this must be authorized by a senior manager. In the commercial practice, this senior manager is not enough. Not only one senior manager can do the authorization. It's sometimes got two approval. One approval or one authorization is come from the respective departments. Say if a production manager, his salary will be changed, then his supervisor in the production department need to authorize this first of all, and next the HR department need to authorize as well. The human resources department need to authorize for this pay raise changed. And once obtained the pay raise, then we need to record the number of hours worked with supervisor authorization. And hourly paid employees will record details of hours worked. This is usually done using clock cards, time cards, punch cards, or any other electronic way on which a machine records starting and finishing times of work. It's talking about the staff are paid on an hourly basis. So for example, if he is working between 9 o'clock in the AM and 3 p.m. So here in the case, the working number of hours of work is 6 hours. And do we have a proper way to record this number of hours by, say, clock cards or time cards, punch cards, or any electronic way to do the record of the number of hours for this particular employee? We need to do it if no. So once we got the records, then and also we need to have approval by a supervisor, because in the practice, the list of staff on the attendance for each day will be printed for a supervisor to review and approve. Once approved, the records will be put in the HR department, in the human resources department, for salary payment. If there is any overtime, it also required a proper record and supervisor authorization. So for salaried employees who are not paid on an hourly basis, they may receive additional pay for overtime hours. If so, they will submit a timesheet with details of the hours worked. So timesheet in some particular industry, the staff need to fill in a timesheet. For example, audit firm, the auditors work in the audit department because they are charged, the number of hours will be charged to a particular client. So they need to fill in the timesheet and state which client are they working for. So once the timesheet prepared and approved by respective manager or partner, the billing will send to the client for the audit fee, for the bill. At the same time, if it's overwork or overtime, the audit employee can also be compensated for the overtime hours that he incurred for the production of audit work or whatever. And once we record the overtime, then the payment or the salary payment will be calculated. Like we have the hours, number of hours in the record, and then we have the pay raise, which is approved by the respective senior managers or so. And once the pay calculated, no matter it's hour rates or monthly payments, then we need to find out whether do we need to have the deductions. If yes, say any social security, any tax need to be deducted, then we need to input into the system as well. Some country, they need to deduct from gross pay, but not all of them. So the tax, social security will be included for some countries. And once the deductions are calculated in the system, so we need to pay to the employee the so-called net pay to them. Many companies will involve the bank to do the bank transfer. And right now, there's not many companies to pay cash. So usually, the payments, the salary, the payments will be done through the transfer from a company's bank account to the employee's bank account. So it's the general practice. And in sometimes the payment will be in cash, but for payment in cash, supervision is required to prevent any theft. An employee should sign to acknowledge receipt of money. So in 30 years ago or in 20 years ago, this is still popular for cash payment on the salary. There's an envelope, putting the cash salary inside the envelope, and on the cover of the envelope, there's a signature box. Okay, the staff, once received the envelope and got the cash salary, the staff need to sign on the envelope and pass back to the Human Resources Department to confirm that he acknowledged the receipt of money. So here is quite a long time ago. There's still not payment or salary payment through bank. There's a cash payment. There's a way for the staff to confirm the acknowledge of the cash salary. So here we talk about the payroll system by this illustration, and as well as we would like to highlight what would go wrong in the case as well. Here the case is XYZ Limited is a company manufacturing handbags, and describe what will happen when the company prepares the payroll for September 2019. First of all, our hours work record. If the factory, the handbag factory, is using the clock cards, so the clock cards from the factory, the workers need to record the number of hours through the clock cards, and the number of hours should be authorized by the factory supervisor. And once the number of hours are recorded and approved by the respective supervisor, the record should be sent to the wages clerk in the HR department or in the human resources. And for those salaried employees who have worked overtime, they need to submit a timesheet to their supervisor for approval. And these are then passed to the wages clerk as well. So for the wages clerk in human resources department, he or she will centralize all input from the production department in this case. And the wages clerk will look up for the pay raise, especially for those like here for hours work, hourly rates. He needs to get the pay rate information in the system, for example. And for overtime recorded, those staff or those employees who work overtime, the wages clerk need to check the pay rate to them as well. And the wages clerk will then work out the gross pay for each of the employee. And up to this point, up to this pay calculated, the work is between the production department here and also the human resources department. And once the gross pay is calculated, a good control system for an organization is the involvement of finance department should be done here, because the accountant need to select, say here, 5 employees and check the calculation. So why do we need to have this check or verification by the accounting department? Because it's a random check, first of all. Second, it can spot any frauds because for the wages clerk, he or she does the calculation, and if there's any tricks or frauds for the wage clerk, such for example, the wages clerk have a very good relationship with the production department head or any production workers, he or she will give a favor to the production workers by changing the numbers in the calculation. Then there's an issue of fraud, because the staff should say the hourly rate is only $10 per hour, for example. But because of the good relationship between the wages clerk and the production worker, the wages clerk restate the number. It's no more $10 per hour. He adjusted, say, $15 per hour. Is one example about to avoid fraud. Another case is the accountant selects 5 employees for random check, is to avoid errors. Say the wages clerk put the numbers 10, suppose it should be 10, but the wages clerk put it wrongly, say put one more zero, say from 10 to 100, then it's wrong. So the accountant can have a random check to see whether any error in the calculation as well. So after the gross pay is calculated, the accountant check it as well. Then deductions are calculated, and for those selected, the employee selected for check, the accountant need to check the deduction as well. So after all the check and calculations are done, the net pay to the employee will be processed by first, the wages clerk produce a list showing the net pay to them. And next, it should be approved by a senior manager. And once approved, the details should be passed to the bank for the bank transfer of the salary. And here you can see there's an accountant check here. This accountant check. It answers the question, what will go wrong for the system, because the system can be wrong if we don't have any control point here, because the inputs here, the payroll system inputs are hourly works record, the pay rate, overtime record, pay rate. So here, so it's an input, output is the salary for the bank transfer. But here, what will go wrong is about like the input, like the numbers. So how can we avoid the errors and fraud? By sample check through the accountant works on it. So here we can see in this illustration, we can explain what will go wrong and how can we solve it, or how can we avoid the problem.